Friday, December 7th, 2018, Monaco 64, home of alternative economics and contrarian views. This morning I want to talk about how money is an instrument of state control, and when the state apparatus loses control, people lose confidence in the money or the currency, the fiat currency. Today, of course, is the 77th anniversary of the attack on Pearl Harbor. That's a different story, of course, but just quickly, what happened there, I think the Americans were provoked the Japanese. They cut all their oil supply. They're doing sanctions like they're doing, for example, like with Russia nowadays. And there are many who think that some people at the top of the U.S. administration knew the Japanese attack was coming, but who knows? There are always these, how can I say, doubts about these things, and I wouldn't be surprised if that was true. But anyway, back to the markets and the question about money and currency as a instrument of state control. I took that from this book here, The Triumph of Gold, by Dr. Franz Pick, and I'll go into it later and how it relates to what's happening nowadays, not only in the US, but in Europe, in the UK. Before that, of course, I'll look at what the markets are doing. Yesterday was a very interesting day, back from the market holiday on Wednesday. And on Tuesday, the market had finished down almost 800 points. Yesterday, we were at one point down over 3% in the Dow. So we were down almost 800, I think. And the market rallied quite sharply towards the end of the day. The Dow finished down 79. The S&P only 0.3%. The S&P finished down 4 points, or 0.15%, and the NASDAQ finished up in the day 0.4%. Why was that? Well, I had a look. Technically, there was a very important level there that we held, and maybe people came in, and just bought the market there. There were talks that the Wall Street Journal had said that the Fed sources were saying that they might rethink their policy. Who knows why that happened, but let's see what's happening today. I personally think nothing will change. The technical picture, as you see here in a minute, I'll show you after I go through the prices, still doesn't look great. So this morning, we've got spot gold at $1239.30, up $1.75. Yesterday, we got up to $1244. Then it drifted lower, and then it started drifting lower before actually the stock market started rebounding really well. Could it have been the Exchange Stabilization Fund? I wouldn't put it past them. That's the U.S. Treasury Secretary and the President that run that. So who knows? Spot silver, 1446, unchanged. The high's been 1450. And the low's been 1442. We really need to close above like 1460 for silver to get a bit more momentum for now. What about the stock market? Well, we're down 200 right now in the Dow at 24,740. Sorry, down 0.8%. The S&P 500 is 2676, down 20. Or 0.75%, and the NASDAQ 100 future is down 52, or 0.75% as well. So the rally hasn't really continued. So we'll have to see. We have non-farm payroll, the U.S. job data. I know it's all hypothetical. I know the unemployment rate is a farce, but it does move the market. So that's out at 8:30 New York time. In the morning, of course. Sterling down 15 pips at 127.69. So not much move there. Euro as well, kind of unchanged, 113.70. Dollar slightly higher against the yen, 112.78. The dollar unchanged against the yuan at 688. Crude oil dropped quite a bit yesterday. Has dropped further. The WTI is 51.13, down 1%. Brent is down 1%, just at 59.56. 10-year yield dropped quite aggressively down to like, I think it was, I'm not sure where it went yesterday. I think it was around 285 or 86. Right now we're at 288. What about the curve itself? Let's have a look. US yield curve. So the 2 years at 275 right now, and the 5 years at 274. So yeah, it's slightly inverted. The 10-year is 14 basis points away from inverting towards the 2-year. Some people actually think that in terms of trading, and this is for bond traders, they think that the big play will be to buy the 30-year bond, which is at 314 still, and sell the 10-year, which is at 287. They think that's going to flatten and could invert as well quite sharply. There's about 27 basis points of opportunity there. That's more for the professional, though, I would say. Let's quickly look at the charts of the major indices before I go on to the subject of state control of money and currency, fiat currency that is. So we've got the Dow here. You can see what I was talking about. The low from the 23rd of November was 24,285. Yesterday we got to 24,242, so we broke below there, but it held. There's a low as well from the 29th of October, which was just below there. So I'm sure people were looking at that, and I think that's the key level now on the downside to keep an eye on. You can see the 200-day moving average right now is at 25,109, and we closed at 24,947. So we still haven't managed to get back above the 200-day in the Dow. The S&P, same kind of thing, you know, key support seems to be around, I would say, 2605 and 2630. Yesterday we got down to a low of 2621, rallied back. But notice how the 50-day moving average, that's already crossed under the 100-day, but is just about to cross under the 200-day. Right now, 50-day is at 2767. The 100-day is at 2762. So it's very close to crossing under that. That's another negative sign in terms of momentum, I would say. NASDAQ. Well, NASDAQ, you know, got down to just under 7,000 and it held. That seems to be the level they're keeping an eye on. Further down, of course, there's the low from the 20th of November at 6830. So those are the key levels. And notice how the NASDAQ, which comprises the composite, of course, comprises of all the FANG stocks. Notice how the 50 days gone under the 100 and 200. So that the momentum here is even worse. We're nowhere near the 200-day or any of the moving averages. And I guess the next thing here is when the 100-day goes under the 200-day. That could still take a while. So as you can see, the technical picture isn't great. The Triumph of Gold by Dr. Franz Pick. Well, this is in the introduction and it's written by a Dr. Henry Jarecki, a friend of Dr. Pick. And there's an interesting section here where he says, because Pick was a follower of a 19th century Prussian economist called Georg Friedrich Knapp. And this guy, Knapp, believed that money was an instrument of state order, that its value reflected the public's attitude toward the state, and that given men's failings, and thus the state's, the only road a currency could go is down. And I agree with that. And Mr. Dr. Jarecki goes on to talk about how Knapp was the professor of the guy who was the Minister of Finance during the German hyperinflation. So there are some things that he doesn't really think Knapp understood, because the Hefferlich, who was the Minister of Finance during the German hyperinflation, he believed that the reason prices were going up just before the hyperinflation was that there wasn't enough money in the system. So that's why he printed money, which is kind of a fallacy, I would say. But one thing that I would say, the concept of the confidence in the state apparatus. What's the state apparatus right now? Well, I would say it's kind of like the trinity between politics, central banking, and finance. You know, the bankers on Wall Street, City of London, Frankfurt. That's what it is. That's what represents the state now, as it relates to currency. And I think there's too many people out there who have too much confidence in the management of the fiat currencies right now. The only reason they think that hyperinflation is something to do with costs and demand, supply and demand. But I think it will come as a loss of confidence in the system, especially the central banks, the state as well, which is intertwined with the central banks. And I think we are seeing symptoms of that, people losing faith in their state, not only politicians, but the whole system. You look at what's happening in the US, which is very confusing. You've got supposedly this battle between Donald Trump and the shadow government. Shadow government, of course, is the intelligence apparatus. Then you have the deep state, which is more the military-industrial complex. So supposedly you got this conflict, civil war. There's talk here on Zero Hedge. This morning it says, and I quote, I know where all the bodies are buried. Clinton Foundation CFO spill beans to investigators. I mean, could President Trump realize that if he does expose, the shadow government and the deep state to all the crimes they've committed, supposedly committed, and I think they have, does he realize that could unravel complete, the confidence of the general public in the United States, the state apparatus of the United States. And with that, people would lose complete confidence in the currency or money, fiat currency of that, of that entity. That is possible. We'll have to see. And the same thing is happening in Europe, especially now in France. I think this is a lot more than just a fuel protest. And it's not going to get better. I think, the protesters in France have continued. They haven't bought into President Macron's 6-month extension of freezing the fuel prices. And there's talk now of a confidence vote on on President Macron's administration, which I haven't seen before, because I think the French president has a term for 5 years or so. I'm not sure. So, and then you have the UK, Brexit. People are certainly, there's certainly a lot of loss of confidence in whether the political class, the state within the UK can manage things, especially, they've had 2 years to go through this process. And people even if nothing happens, if there's no deal and they extend it, people will lose confidence that the system is fair. So that's what I'm trying to say. Hyperinflation could come out of, it always comes out of loss of confidence in the states. And as the fiat currency is an instrument of the state, if people lose confidence in that state, they will lose confidence in that instrument. So hyperinflation has got nothing to do with too much money printing or costs. It's got more to do with that people don't want that money, or that, well, money is the wrong word. It's the currency, right? The fiat currency, the fraudulent fiat currency. And that's where I think the hyperinflation will come from. That's why, even though supposed CPI and inflation is low, it could happen overnight. If you enjoyed this video, make sure you hit the like button. Subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. I wish you all a great day, and I'll talk to you later. Take care. Bye.